Hello, everyone. Welcome into this week's episode of Smart Money Sundays. Hope you're doing well and feeling well rested after the Thanksgiving holiday here in the States. I certainly am and enjoyed a nice couple of days of break and relaxation and ready to attack it again on the charts. However, I've selected a number of pairs to kind of cover from a higher time frame perspective in terms of establishing a bias heading into this full week ahead of us, and hopefully have some pretty good moves play out this week in the market. Now we're going to start off here as usual on Euro USD, and really by and large, kind of across the board, a lot of things remain the same, kind of as last time we spoke, last Smart Money Sundays. A lot of the levels are still intact, right? And a lot of times especially as you gain experience, we'll notice that a lot of this is a patience game, right? And staying true to your levels and not chasing and forcing trades that aren't there. All right, so on Euro USD, obviously the dollar is quite weak at the moment, and you can see on the daily time frame we are creating higher highs and higher lows, right? So naturally we should be looking for that retracement, another higher low, and then the extension for another higher high. Right, and so that level from last week on the 4-hour time frame, 1.00437, that is still my level. Right, last week we really didn't have much to play off of. Right, we kind of just chopped the whole week and obviously pushed higher, right, throughout the week. Right, potentially forming some sort of double top situation here that might engineer liquidity for an overall retracement that will then have a draw on liquidity. Right, once price provides a discount for us to buy into that pool of liquidity, right? So again, looking for that retracement down into 1.00437. That's the level of interest. Now, of course, we could trade lower, right? Because our true technical trading range, right, is from this low to this high, right? So this is our entire range. We could very easily trade back down into here and still be within our trading range, still be bullish. Right, I just see more confluence around this down close here. Right, and kind of our overall targets, our overall objective, that remains the same as well, 1.06200, right above this pool of liquidity, potentially digging higher up into 1.0700, right, 1.062 into 1.0700, that's the overall objective up here. Right, so literally it's just being patient. It would be really nice to get that overall pullback. Sometimes we don't. Sometimes it'll just continue up, right? And that very well could happen, and that's okay. We move on, right? So I'm going to be looking for discount to buy this. I don't want to be buying in premium, right? We obviously can potentially see a very nice swing opportunity, 600 pips to the upside if we do get that retracement. And that really goes across the board here on these majors, right? GBP USD. Same deal. It's a little bit stronger than Euro USD. Obviously extended higher, created that new higher high last week. We didn't get that retracement that we wanted, right? We wanted it to get down into this 30-minute inefficiency. Right? Obviously wick to wick, 50%, 1.15 into 1.1420. That was our kind of buy zone. That still remains intact for me. Right? So I really want to see price have that overall retracement, fill in this inefficiency, right? Provide us a nice discount to get long again, right? And overall, we can be looking to target. In my opinion, I think we can dig above this old high here, trade into this old low at 1.2430. I think overall we can hit that level, right? So it's only a matter of, again, being patient, getting that overall retracement, right? Letting them weed out the retail traders, and then getting long, right, up into that level, right? But I'm going to stay true to my higher time frame level of interest, right, and not going to chase trades, not going to be chasing buying opportunities in market premium. All right, and if we just continue to push up into the objective, oh well, we move on. Right, there will be more trade setups. All right, but that's what I'm looking at. That's what I'd like to see for the here and now. Right, and the same applies again, across the board. Like I said at the beginning of this video, a lot of things are still intact. Most of the levels are still intact from last Sunday. Right, same with AUD USD. Wanted to dig down into the daily down close candle here. right? Daily down close before that big bullish engulfing candlestick, right? That inefficient pricing, that full-bodied candlestick that was created a couple of weeks ago, right? We didn't trade down into that immediately last week, and that's fine. So we can treat this now potentially as an internal pool of liquidity to be run out potentially while trading into discount for continuation. All right, so that level 6.4, really 6.500, right, and potentially digging deeper down into this inefficiency, kind of 6.450 area. That's going to be the overall extreme POI. But we also have this bit of level here that, obviously momentum is strong to the upside right now, so it very well could simply retrace into something like this and then continue higher. All right, so this is going to be my initial point of interest for the Aussie dollar. Right, bit of level where we traded into supply, had a reaction, but that supply failed. Right, so that could potentially be that flip for the continuation. All right, so 66715 and then 6500 into 6450. Those are the overall levels for AUD USD. And in terms of objective, I do think price can achieve at least this area of supply here, kind of at 6,860, 6,900, 6,900 really overall, the round number that we'll be looking to target. All right, NZD USD is going to be very similar. All right, same kind of down close as we're looking at on AU. Right, it's just a matter of being patient, getting that overall retracement, and then the continuation higher. Right, the objectives, same as last week, potentially up into here, 6,430, more than likely at least 6,350. That's going to be the objective. All right. So nothing much changed on this one. This is kind of just an overextended leg here. If we can get that discounted retracement, then we'll offer a very nice buying opportunity for us. Moving on to some of the yens and exotics. Swiss franc, Japanese yen. All right, this one's kind of chopping around. Right, kind of what theme we're seeing overall in the markets last couple of weeks. A lot of choppy price action. It does happen around the holidays. But what I do like on this one is that we had a nice pool of liquidity here. Right, that was obviously destroyed. Right, as well as this wick here with this down close here for the subsequent rally. Right, and then we've since been kind of chopping around. This appears to be very corrective in nature. Right, and so what I'd like to see, right, is potentially a buy to sell mitigation to buy. Right, we get that subsequent break of structure there. Good to take it on the pullback and continuation, targeting obviously these highs, right, and then our most recent highs here. Right, but that could be something that most definitely plays out. I'll have to monitor time and price. When price is obviously trading into our down close candle here, obviously we go in depth in time and price and really how to execute and establish trade confirmations once price is trading within our POIs. We go in depth on that in our courses and in our one-on-one sessions with mentorship students. All right, but that's the overall level on Swiss franc, Japanese yen. And then in terms of CAD, Japanese yen, obviously we've now traded into, if you recall, we were looking at trading down into the 4-hour down close where we had the head and shoulders, right? Engineering that neckline liquidity, sell to buy, right? Retail traders guarantee you we're trapped here, right? And they got destroyed, and then we rallied for a new higher high. So we've now not only run out sell side liquidity here, but we've traded down into that level. Now what I think could happen is we could potentially see one more run on the low and trade a little bit deeper. This is where you have to kind of go back and really analyze your points of interest. I think that we could very easily trade down into this area here, running out this internal liquidity, trade into this down close sell to buy that was truly technically never accounted for. All right, and that brings us in around 103.20. All right, so what I could very easily see taking place this week right, is potentially one more run, or maybe engineer some liquidity, have that final run, and then get that rally, and then we can take it as confirmation, take it on the pullback. All right, but we have now traded into a higher time frame level. It's now just a matter of being patient, letting them weed out the retail traders, right, and then getting in at the right time of day, right time and price, right, once the banks have left their clues, for us to then target buy-side liquidity. And we obviously have nice highs here and a lot of inefficiency to fill up to the upside. All right, so let's see if we run previous week's low, get that sell to buy, and we should be good to go on that one. EG, obviously still in our sells from here as well. Now this is going to be a very critical point, this 4-hour doji candlestick resting beneath all of this liquidity. All right, let's see if we get a clean break below, right? In that case, have our lower high and lower low sequence. That should be added confirmation for a bear market. Otherwise, we very easily could see, a sharp run, sell to buy, in which case I wouldn't necessarily be looking at this as a break of structure, and we very easily could potentially head up into our higher time frame level of premium. All right, remember that 1-hour candlestick up here at 8,900 that we've been talking about forever? At that point, then I'd be looking for sells from there. All right, so this will be a really critical level, 8,550, pay attention to that. We'll see how price reacts to that level. Nevertheless, we did catch really nice sells here. We should continue down through this pool of liquidity here and hit our overall target on the sells. All right, and just be patient for what happens with respect to this level here at 8,550. Euro NZD. This one has now created a new lower low, right, relative to this lower high, lower low, right? And so naturally, I'm looking at pullbacks. We still have a lot of room to go, right, potentially to the downside here, and especially looking at continued NZD strength. So for me, my eyes gravitate towards this candlestick here before we had that massive engulfing, right? We never really did retrace. We never did make this market efficient. So it's really the daily and kind of the 5-hour up close here that I'd really like to see. Right, obviously, it ran liquidity as well. Big buy to sell. All right, so I'd like to see corrective price action getting back up into here and then the follow through. All right, pretty simple, pretty straightforward, just looking for continuations, right? It's a sell model that we like. You run the lows, right? You run the highs, and then you follow through, create a new lower low. Right, so this needs to be mitigated. This needs to be accounted for. Right, 6865 into 6900. That is the point of interest. All right, Euro CAD. This is another one that really remains unchanged in terms of bias, in terms of points of interest with respect to what we talked about last week. Obviously, very bullish. The Canadian dollar is very weak, right? Creating higher lows and higher highs. Right, so naturally we should expect a higher low, point of interest 1, higher low, point of interest 2 for that continuation. Right, 3505, we talked about this specific level here and this specific level here last week. I'm not going to go into it again. If you're interested, just flip back to the prior episode, but we did talk about these levels. Nothing's really changed here, right? We just pushed higher last week. All right, so just need to be patient for the overall higher time frame retracement, right? And then we'll get that nice discount for a nice swing back up to the upside. And the same applies to GBP CAD. Same applies here, right? Higher highs, higher lows. Right, we still have our nice pool of sell-side liquidity with these equal lows resting prior to our area of demand. Hop on a little bit lower. All right, our area of demand here at 5,450. All right, so again, overall retracement, Would really need a swift sell-off here, and then we can get long again for another swing to the upside. Right? But just currently trickling, I'm not interested in buying at premium. Right? So nothing much you can do there. Right? Except look for counter trend risky sell opportunities, which I don't want to do. Right? I'd much rather take continuation trades along with a higher time frame trend and momentum. Right? GBP CAD, or excuse me, GBP Swiss franc, right, has obviously traded into our POI here. Right? We had that supply to demand flip, break of structure higher. This should naturally be the draw on liquidity, this prior high. You can also fib this level or fib this move, right? A, B, C, negative 27 brings us in and around these old highs here, which is nice. That should draw the liquidity as well. So I've just kind of rounded it off to 1.1800. That's my overall objective. Nice round figure here on GBP Swiss franc. The pound is very strong at the moment. All right, which does bode well for continuations to the downside there on Euro GBP. All right, so again, it's just a matter of patience. We have internal liquidity to be run out. We get that retracement. POI 1 from last week, that's still intact. Obviously, POI 2, should we run this low out, POI 2 is obviously still intact as well. So 1.1225, 1.1185, these are my particular levels that I'm interested in terms of discount for continuations here. All right, just following market structure, following the trend, doing top-down analysis, and identifying our areas of institutional manipulation, imbalance, and efficiency. All right. Euro AUD, right, with expected Aussie strength, naturally would be looking at continuations lower here as well. Right, this is one where we ran the highs, right, then ran the lows again. Right, so it's a bit of we're in a bit of a manipulative market here, right? But my bias, given the Aussie dollar, is to the downside on this one. We never really did trade back up into this overall level of supply, this inefficiency. So I would be interested in sells on this one if we do get back up into this area of supply, really 1.5600, and then I'd be looking for overall continuation short. Right, obviously targeting this low first and foremost. Right, otherwise I'm not really interested in trading in the middle of this range. Right, we're going to have see some sort of significant manipulation and buy to sell for me to want to get involved in this market. Need to be selling above old highs. Right, AUD CAD, nothing much on that one. We'll skip over that. Still need the retracement continuation. Nothing's changed on that. NZD CAD, same deal, just need to see the retracement. All right, just simply following this big trend to the upside. We have our area of demand here. We could just get back down into discount, 82334. That's my point of interest for continuations. Right? So pretty clean, pretty straightforward there. And the final one I want to touch upon, Euro Swiss franc. Nothing crazy. You know, this could be an area. It's just not my favorite pair. This could be an area of mitigation. I just don't necessarily like how relatively equal these lows are right here. Right, but we have traded into a POI. We did run liquidity here, so perhaps we do see some type of an additional run on liquidity before seeing that push higher. Right, so maybe there's something in this wick. I don't really feel like going down to the lower time frames, but feel free to. Something within this manipulative wick that price could play off of. Otherwise, this might be your area, but I'm certainly not placing a limit here. I would wait for lower time frame price action, sell to buy, and then take that thing higher. All right, so that wraps it up for Smart Money Sundays this week, guys. We have a lot of promising opportunities. It's just a matter of being patient and letting price trade down into our levels or up into our levels, and not getting distracted by all of the garbage and all of the noise that's in between. All right, hope you have a great week. VIP mentorship students, we will be in touch, obviously providing daily setups during New York session and our daily market breakdown videos every single day. for you, so you can kind of get an insight into our minds and what we see day in and day out. All right, have a great week. Safe trading. We'll talk to you again next time.